in Northern Virginia. But prices are increasing at a dramatic rate here in the DC area. It's Fairfax, Arlington, Alexandria, Falls Church City, and Fairfax City is generally what I'm talking about. And what I wanted to bring to the table today, here about mid-year 2021, is that we are seeing an astounding increase in the listing prices of properties. What you're looking at here, you might think that each one of these price points, it represents a year. No, these represent a month. In October of 2020, the median housing price was $572,250. Now, we use median, the professionals use median because it shows us what's going on with the whole market as a whole. To use an average, let's say, there's a $40 million property on the market right now in Northern Virginia. Well, if I take that and add that to my average price, it's going to make that 572 higher. But if I've got, 1,000 properties on the market and that middle price is 572,250, then all the houses above it are above that price. All the houses below it are below that price. So I got 499 houses that are below 572, and I got 499 houses that are above 572,250. So we see that in November, prices dropped, and the median price of the ones coming on the market dropped to $550,000. Look now what's happening up here in the beginning of this year. Actually, we're getting toward mid-year. They went up to $649,900 in April, $100,000 increase in the list prices that were coming on. So why is that going on? Well, back in November, there were these prices, the houses that came on the market, people escalated them. Well, they escalated them so much that the agents and the sellers put it on for an additional $14,000 the next month. Well, they escalated and they moved up again. And so the next month in January, sellers started coming out with those properties at 575. And as you can see, they kept moving upward through that time period to where we now have 640,000 is the average listing price, or the median listing price that's coming on the market in the Northern Virginia area. So we talk about that, and what we look at is what are the trends. So this is my trend line showing what's going on, and we see that it's continuing to trend for the last 6 months. And that is a 16.5% increase in the median list price that's coming on the market in the Northern Virginia area. Folks, that's a 33% annual rate of increase. So that's not sustainable. I do project and think this is going to level off. And I think it's going to level off because buyers are just going to start backing away from the table and wait to see what happens. The difference with this type of market than the last time we saw this back in 06 and 07 is that we didn't have funny money in the market. And also we did not have the bank failure that's going on. The banks look like they're not doing funny money, and the mortgage companies are dealing only with real money and only real buyers. So we see that at least that end of it is pretty secure. But a 33% annual rate of increase, it's going to, just by virtue of wiping out a lot of buyers that just can't keep moving up at that pace, you're going to have the ones that are well moneyed that are going to stay in that marketplace, but they won't be competing with as many. There won't be 1,000 buyers looking for the 100 houses. We'll get back down to 200, maybe 150 buyers looking for the 100 houses, and that will level off the increase. I just think that that's probably what's going to happen. Hey, I could be wrong. I don't have a crystal ball. But what's making it go up? You would think, what's making the price of houses is driving the market? No, the price of money is what's driving the market. Let me explain this. Back in 2000, and look at each one of these bars. On the left side, I have the year 2000. The interest rates in 2000 were 8%. And so a $400,000 mortgage, which is what all these bars are based on, and the line is based on this right side over here. Those are the interest rates that mortgages were going for. This is from Freddie Mac and their historic interest rates information that they have. So if you borrow $400,000 in the year 2000 at 8%, you would have paid $2,949 for that mortgage, for borrowing that $400,000. Now that's just the principal and interest. It does not include the taxes and insurance. So if the taxes were an additional $400 a month, your payment would be $3,300 up there. So you understand how that is. But what I'm talking about right now is its principal and interest. Well, let's go through the years. Every 5 years, interest rates came down to 5.87. And then interest rates came down to 4.69. You see the payment is dropping. We're almost down $900 by the time we get to 2010. 2015, we got the sub 4% interest rates, and all of us in the business thought they'll never go lower than that. They'll never hit 3.5, 3.25. And yet, look what happened 5 years later. We enter ourselves into a pandemic. We got to shore up the real estate market because, as we know, the real estate market drives a whole lot of the economy. The lowest the interest rates got to, which is about October of last year, was 2.68% on a 30-year fixed loan. And for 2.68%, you could have borrowed $400,000 for $1,618 per month. Right now, they're running around 3%. So a few months later, you're now getting that money for $1,686 per month. Look at that. That is almost a $1,300, almost a 50% drop in your monthly payment for the same money for $400,000. So what's going on right now, folks, is buyers are not chasing the price. They are chasing their payment. What will my $1,600 buy? What will that purchase? If you're comfortable with $2,000, if you're comfortable with $2,500, what will my monthly payment purchase me? Obviously, if you're at $3,200 principal and interest, you're talking more like a $750,000 to $800,000 loan. Those rates may be a little bit different because that's a jumbo loan, but you see what I'm saying here. The interest rates are driving this market. So even if the prices were to drop, people are not as nervous about that because they feel like, well, I know I bought this place for $550,000, or let's say I bought this for $460,000, and my mortgage is $400,000. Let's say it drops down to $420,000, of which I bought for $480,000. But what's the difference? Well, my monthly payment is so low. If I need to move out before that price property comes back up again, I can rent it out for more than $1,686. That's the thoughts that are going through here. And unless the bottom absolutely 100% drops out, if you have to leave your property, if we have a drop in prices of property and you got to leave your property, but you've got that kind of payment, you'll be able to rent a single family house or a townhouse out for that kind of money. So that's what we're looking at as far as what's driving that market and how to measure that as we're moving forward. Now, let's go fast forward to May. And this is looking from January to May of this year, looking at the number of listings that are coming on the market. That's this amber looking line. Then we have the shadowed line. The shadowed line is the number of contracts that are coming onto the market. We listed, maybe we listed, what is that, about 700 properties. And that week, about 550 properties went under contract. So that's what that's measuring. Then you have this lower line here, which is measuring the closings that are going on. This is not cumulative. These are individual weeks, which is a natural flow for the year. Week 1, week 2, week 3, so that we now see that we've got about 925, 940 listings coming on that month, that week. And down here, we've got about 710 that are going under contract. So what's happening here, though, look at this. There's a divide going on between the listings and the under contracts. Back here in week 5, early February, January, February, we had a much closer differential between the number of listings on the market and the number that were going under contract. We're seeing a year-long trend line. That's the green. Oh, this is going to continue. And the green is for the pendings. That's going to continue. Well, that can be something that's not really telling the truth. And let me take a look at what I hear. This is something that we're seeing just for this month. Look at my green line, which is my new listings. Look at my red line, the dotted line, which are my under contracts. What's the trend line now for May? I'm just saying we may have hit a point where buyers are starting to back away because the prices are hitting that high level that they're just like, I can't take the fact that that's where that's going. I know my payment's only $16,000, $2,000, $2,400 a month for this, but if the market drops, I don't know that I can sustain what would happen. Now, as listings go on a daily basis, these big upticks here, that's normal in our industry. We normally are putting a lot of housings on the market on Thursday and Friday, and then the contracts do normally get ratified on Monday and Tuesday. So you're seeing a pattern here that is normal. What I'm looking at though is where are my peaks? The peaks continue to move up, and the peaks are starting to move down on the pendings. So that's kind of the thing that's making me take notice on what is going on with the market in Northern Virginia and what does that mean for buyers and sellers. So the pending contracts, the trend line for month to date is starting to dip, and we haven't seen that in quite a while. So here's the next move. Sellers, get on the market. You're possibly hitting the top. If you've been considering selling your market and moving out of state, I would submit to you, go ahead and get on the market. Contact your real estate professional, get the pricing. That would be me as well, if you know who I am. And then also clean up, declutter. Even in a hot market, buyers want to feel good about what they're looking at. And I would say fix the obvious defects. It is amazing when we're seeing properties sell for top dollar that need a lot of paint, a lot of flooring. The toilets are loose. The light switches aren't working. The stove's got a burner that's bad. You know, even though you can do that, I think you're going to get more money and the people are going to feel a lot more confident in the purchase if the property is in substantially a good condition when you are selling it to them. For the buyers, should you buy? If you're looking at long-term, I'm going to say yes, it's still buy. You know, Northern Virginia is a little bit different than a lot of other markets out there because in Northern Virginia, what's in our backyard? The White House, the Congress, and Pentagon. And not a lot of markets can say that. So that's something that sustains that in America as far as Northern Virginia is concerned, is because of those three entities. However, we're also a very huge technology center. We are the Silicon Alley versus Silicon Valley out west. We have a lot of IT companies, a lot of producers of those services that serve the U.S. government. The last I'd seen, we have about 50% of the internet going through Northern Virginia because of the servers and the technology businesses that we have here as well. The rates will increase. Even with ebb and flow of prices, the rates are not going to last. And like I said, that's what people are chasing. We saw a drop all the way to 2.68. They're now back up a little bit over 3%. So that's what you're going to be looking at. I sent this postcard out to some investors in Northern Virginia, actually specifically Springfield, the zip code, showing them what's going to happen. Yes, this is over 20 years. Yes, you're going to have a top, you're going to have some drop, and at the bottom of the drop, it's going to come in. However, I want to point out that when this drop happened in Northern Virginia, it was because of the bank failures and the funny money in the market. It was not a normal situation. This is more normal right here. As you saw, this was more normal in 5 years. What was going on there? We had the dot-coms going on, and it was post 9/11. And we had the Department of Homeland Security was building up. Then we had the funny money, and then we had the regular flow up here. But right now, this increase is because of the interest rates and what's going on there. Thanks for listening today. Don't forget, subscribe to my channel, like what you got here, comment on it, share it. If you got any questions, enter them below. Be happy to help you out with that. And I really appreciate you coming by and listening to my channel. Have a great day.